Dissolution of partnership firm. Fifth unit, first part. Dissolution of partnership firm is different from the dissolution of partnership. Dissolution of firm means complete closure of the business activities of a firm, while dissolution of a partnership means a reconstitution of the firm due to the admission, retirement and death of a partner. On the dissolution of the firm, the assets of the firm are realized, liabilities are paid off, and whatever remains is paid to the partners in settlement of their account. First, there is a difference between, you must know the difference between the partnership, dissolution of partnership firm and dissolution of a partnership. Dissolution of partnership, so far we have seen admission, retirement, death are all coming under the category of dissolution of partnership. Just they reconstitute the firm and they continue their business. Okay, they change the profit sharing ratio, capital structure, revalue the business assets and liabilities. Okay, the business will not be affected by the admission, retirement and death of a partner. Whereas in the case of dissolution of a partnership firm, complete closure of the business. They will not do the business. Okay, they close the business activities of the firm. So on the dissolution of the firm, assets of the firms are realized because they are not going to continue the business, and so they sell all the assets in the firm. Liabilities are settled or paid off. Whatever remains is paid to the partners in settlement of their accounts. They sold the assets, they settle the liabilities, and in case if they have any amount, then balance amount that will be distributed to the partners. So this is the partnership firm dissolution. The following are the circumstances under which a firm is dissolved or comes to an end. When all the partners agree to dissolve the firm, when all the partners or all except one become insolvent. Insolvent means the assets or the asset of a particular partner is, the value of the assets of a particular partner is lesser than that of the value of the liabilities of that particular person or partner. Okay. When the business of the firm becomes illegal, suddenly the business which they are carrying out becomes illegal due to some government new rule and all. So they are not supposed to do the illegal business. Okay, so naturally the partnership firm comes to an end. In case of partnership at will, when one partner gives the necessary notice, when sometimes a court interferes and dissolves the firm. These are all the circumstances under which a firm is dissolved. Dissolved means it totally comes to an end. Permanently it stops its business. Okay. Mode of dissolution. Dissolution by agreement, compulsory dissolution, dissolution on happening of certain events, dissolution by notice, dissolution by court. First one, dissolution by agreement. A partnership firm can be dissolved at any time by mutual consent of all the partners. So if the partnership firm gets mutual consent of all the partners to disclose the business, they will disclose the business. Okay. So if they give their consent, permission to dissolve the partnership firm, naturally the partnership firm comes to an end. Business comes to an end. That is the first mode. The firm is dissolved by the mutual consent of all the partners. Second mode is compulsory dissolution. There are certain cases in which a firm becomes illegal and stands dissolved. The following are the cases. When the number of partners exceeds 20. When all the partners or all except one become insolvent. When the citizen of an enemy country becomes a partner. Where the business of the firm is opposed to public interest. These are all the circumstances under which the firm business becomes illegal or the firms becomes illegal, and so it has to be dissolved. Next, dissolution of happening of certain events on the expiry of the period for which it was found. On the death of a partner, sometimes the partnership firm comes to an end. Then on the completion of the venture agreed upon. They started the partnership for completing certain venture. If the venture is over, then naturally the partnership, they dissolve the partnership firm. Okay. Next mode is dissolution by notice. In case the partnership is at will, or any partner gives a written notice to other partners with the intention to dissolve the firm, it will be treated as dissolved from the date which is mentioned in the notice. If any partner gives a written notice to the other partner for his intention to dissolve the firm, it will be treated as dissolved from the date which is mentioned in the notice. He has to mention the date of the dissolution. Okay. So this is known as dissolution by notice. Then dissolution by court. Sometimes court interferes and dissolves the partnership firm. These are all the circumstances. First one, when a partner transfers, sells his share to a third party without the consent of other partners. Without the consent of other partners, if any one of the partners transfer his share or sell his share, the court will interfere and the firm will get dissolved. When a partner becomes an unsound mind, if he becomes a lunatic person, then the partnership firm will be dissolved. When a partner gets disabled permanently, if he has any disease and if he is not able to understand the concepts of partnership, agreement and all, naturally the partnership firm comes to an end. When a partner is found guilty or misconduct, if he does any misconduct, then the partnership firm comes to an end. When the firm cannot be carried on except with losses, in these circumstances, court will interfere and dissolve the partnership firm. Settlements of account, because they are not going to run the business and so they have to settle the accounts. Okay, outsiders liabilities, partners loan, partners capital, all have to be settled. Okay, how they are going to settle? They will sell the assets and settle the liabilities. Okay, there are some certain rules regarding the settlements of accounts. Let's see. Section 48 of Indian Partnership Act 1932 lays down the following rules for the settlements of account after dissolution. Losses including deficiencies of capital shall be paid first out of profits, next out of capital, and lastly, if necessary, by the partners individually in their profit sharing ratio. First, they will settle the debts out of the profits. Second, out of capital of the old partner. If necessary, sometimes the partners are asked to bring capital, cash, okay, in their profit sharing ratio. Okay. Then B, distribution of assets. Okay. So, for you just understand this point clearly. First, out of profit, they settle the amount. Second, out of capital. And lastly, if necessary, by the partners individually in their profit sharing ratio. If necessary occurs only, the partners have to settle the debts individually in their profit sharing ratio. Then distribution of assets. The assets of firm including any sums contributed by the partners to make up deficiency of capital shall be applied in the following order. This is the order of settlement. First, payment made to settle third party's debts. So, third party debts should be given first preference. Second, advances made by the partners. Third, partners' capital. Fourth, if any surplus, it will be distributed among the partners in their profit sharing ratio. The first preference is given to the third party's debt. Second preference is loan given by the partners. Third preference is given to their capital. And if any surplus after settling all this, if there is any surplus in the firm, that has to be distributed among the partners in their profit sharing ratio. Then settlement of firm's debts and personal debts. The property of the firm first should be used to settle firm's debts. If any surplus available, it will be used to settle partners' personal debts. Okay. First preference given to the settle the firm's debt if they sell the property of the firm. So, firm property should be first used to settle the firm's debts. If any surplus is available after settling the firm's debts, then it can be used to settle partners' personal debts. So, first preference should be given to firm's debts, and then if anything surplus is if any surplus is available, that may be used or that will be used to settle the partner's personal debts. Like that, the private property first to be used to the personal debts, and if there is any surplus, it will be applied in payment of firm's debts. Like that, partners' private assets first to be used to settle the personal debts of the partner. If there is any surplus, it will be applied in payment of firm's debts. This is the way to settle firm's debts and personal debts. Goodwill. In the case of dissolution, goodwill shall be included in the assets and may be sold either separately or along with other property of the firm. Goodwill is considered here as just like other assets. Okay. Land and building, plant and machinery. Like that, goodwill also considered as an asset, and it may be sold separately or along with the property or other property of the firm. Let's see accounting treatment of dissolution of partnership firm. A realization account is opened on the dissolution of a firm. The object of such account is to show the profit or loss on the realization of assets and payment of liabilities. You have to understand one thing here. This is a realization account. So far we have seen revaluation account in the case of death, retirement, admission and all. Here we have to prepare realization account. In this realization account, this shows the profit or loss on the realization of assets and payment of liabilities. What they are doing at the time of the dissolution of the partnership firm, they sell the assets and settle the liabilities. Okay. Sometimes the liabilities, the assets are sold at higher prices. Sometimes the assets are sold at lesser prices. Then like that, sometimes payment of liabilities, the creditors will accept lower amount. Sometimes we have to settle the amount with the person with some interest. Okay. So this realization account shows the profit or loss, how much profit, whether the profit earned by the firm or the loss suffered by the firm. We can understand with the help of realization account. Let's see the journal entries for dissolution. First, for closing assets account, they have to close the books of accounts because they are not going to continue their business. Okay. And so they have to close all the assets and liabilities, capital, reserves, all the items in the balance sheet should be closed. Okay. So first let's see the asset account. First they close the asset account. How they are going to close the asset account? All assets should be transferred except cash, bank, debit balances of capital account, P&L account. We have to close all the assets should be transferred to the realization account. Okay. So except cash balance, bank balance, debit balances of capital account, we should not touch. P&L account, debit balance. We have to eliminate all these. We should ignore while transferring the asset account to the realization account. The first step is to close the asset account. while closing the asset account, we should not consider cash, bank, debit balances of capital account, P&L account. The entry is realization account data to various assets such as land, debtors, stock, goodwill, etc. But we should not take cash balances, bank balances, debit balances of capital account, P&L account. Debit balances of P&L account. This is the first journal entry for dissolution. Then the second one is closing the liabilities. First we have to close the asset. Second we have to close the liabilities. All liabilities except loan from partner, reserve should be transferred. These two should not be transferred. Okay, loan from partner and the reserve. Except these two, all the other liabilities should be transferred to realization account. The entry is various liabilities account data to realization account. Then third, for realizing assets, they are selling the assets. So, for selling assets, at the time of sale, the firm may get profit or loss. If the assets are sold at higher prices than that of the book value, the firm will get a profit. If the assets are sold at lower prices than that of the book value, then the firm suffers loss. Let's see. When sold for cash, bank or cash account debtor to realization account. When they sell the property, assets for cash, then the entry would be bank account debtor or cash account debtor to realization account. Sometimes one of the partners may took the assets. Okay, that assets may be taken by one of the partners. Suppose there is a old typewriter in the firm. That old typewriter or computer may be taken away by one of the partners, A, B, C or partners. B may take the old typewriters or computer which is in the business firm. Okay. So, in that case, what would be the entry? Partner's capital or current account debtor to realization account. From his capital account, the value of the assets which is taken by that particular partner should be debited. The capital account of the particular partner should be, the particular partner means the partner who is going to use the asset. Okay. So, the value of the assets should be debited from his capital account. Then, when assets is used to settle creditors, there is one creditor whose name is D. Okay. So, he has to be settled 10,000 rupees. Instead of giving cash, D may prefer to take some of the assets in the firm. From the firm, he wants to take some of the assets. Okay. So, in that case, what would be the entry? It should be deducted from the creditor's claim and the balance to be paid to him. Okay, 10,000 rupees we have to give. The partnership firm has to give to this D. D is a creditor. Okay, so he has taken 5,000 worth of assets from the partnership firm. So, the balance 5,000 only should be paid to D. This is the treatment. Okay. The next one is discharging liability. Why they are selling the assets? In order to settle the liabilities. Okay. How they are going to settle when paid in cash? Realization account debtor to bank or cash account. When one of the partners discharges the liabilities, sometimes one of the partners in the partnership firm agrees to pay the or settle the liabilities. In that case, what would be the entry? Realization account debtor to partner's capital or current account. His capital account should be credited to the extent of the amount which is going to be settled by that particular partner. Okay. Because he has accepted the liabilities and so his capital account should be credited. If he takes the assets from the firm, his capital account should be debited. This is expenses on realization. When expenses are paid in cash, okay, dissolution process is a lengthy, tedious process. Okay, the partnership firm cannot sell all the assets immediately. Okay, it requires the help of brokers and all. So many legal issues are also there. For that, they have to spend amount. That expenses are called realization expenses. Okay, so how they are going to deal with realization expenses? When expenses are paid in cash, realization account debtor to bank or cash account. When expenses are paid by any partner, if one of the partners paid the realization expenses, then the entry would be realization account debtor to partner's capital account. But if a partner bears the expenses of realization personally as per agreement, there will be no entry in the books when he pays such expenses. And if expenses are paid out of partner's bank, the entry will be partner's capital account debtor to bank or cash account. We have closed all the assets and liabilities. The remaining item in the balance sheet is reserve, contingency reserve, P&L account, credit balance. All those things should be transferred to partner's capital or current account. Reserve, contingency reserve, P&L account balance, all should be transferred to partner's capital or current account. Then for closing current account, if they follow fixed capital method, partners have the current account. In that case, if current account shows a credit balance, that should be transferred to partner's capital account. Partner's current account debtor to partner's capital account. If current account shows a debit balance, partner's capital account debtor reversal entry to partner's current account. In this way, they have to close the current account of the partners. Then the next step is they have to close the capital account. If capital account shows a debit balance, bank or cash account debtor to partner's capital account. If the capital account shows a debit balance, the partners should bring cash. If capital account shows a credit balance, partner's capital account debtor to entry would be the partner's capital account debtor to bank or cash account. Okay. If the partner's capital account has a debit balance, he should bring the cash. And if it is shown credit balance, if credit balance is shown, then his capital account should be debited and he has to be paid cash. Okay. Treatment of goodwill. Goodwill is not given any special treatment. It is treated like other assets. If it has appeared in the balance sheet before dissolution, it is treated like any other assets and transferred to realization account at book value. If it doesn't appear in the balance sheet, it has to be ignored. So we have to treat goodwill like any other assets. Okay, we don't need to give any special treatment for goodwill in the case of dissolution of a firm. Then if the amount realized on sale of goodwill, the entry will be bank or cash account debtor to realization. If a partner agrees to purchase the business and pay for goodwill, the entry will be partner's capital account debtor to realization account. Because we have transferred all the assets to realization account. And so we should not write the particular asset if it is sold. Okay. We should not write the particular. Instead of that, we have to debit or credit for both assets and liabilities. We should not mention the name of the assets and name of the liabilities. It is already transferred in the book. All the transactions are carried out through the realization account. If it is sold in the open market, then it is called, then the entry would be bank or cash account debtor to realization. If one of the partners agree to purchase the business, sometimes one partner may be interested to continue the business and he may purchase the business of a partnership firm, and if he pays the goodwill, the entry will be partner's capital account debtor to realization account, because he takes away the goodwill. Goodwill is an asset, and so his capital account should be debited to the extent of the value of the goodwill which is purchased by him to realization account. Treatment of unrecorded assets and liabilities. Sometimes in partnership book, some assets may be missed or may not be available. If the unrecorded assets are realized or sold, the entry would be bank or cash account debtor to realization account. When unrecorded assets are taken away by the partners, unrecorded asset means asset is there physically, but it is not in the book, okay. They fail to record that asset, okay. So that if that asset is taken by a partner, the entry would be partner's capital account debtor to realization account. One thing you have to remember, if a partner takes assets, his capital account should be debited to the extent of the asset value. If he accepts liabilities, then his capital account should be credited with the amount of the liabilities which is going to be discharged by him or which is settled by him. Like unrecorded asset, unrecorded liabilities also be there in the partnership. It is a liability, it has to be settled, but they fail to mention that liability in the book, okay. The entry would be, if they make any settlement for that unrecorded liability, the entry would be realization account debtor to bank. When unrecorded liability is taken over by the partner, is accepted by the partner, okay, then the entry would be realization account debtor to partner's capital account. On dissolution of the partnership firm, we are usually passing journal entries in the following areas. First, we close the asset account, and we close the asset account and we transfer the asset to the realization account. Then, like asset, we have to close the liabilities account. We have to close all the books of accounts in the balance sheet, okay. Then after transferring the asset to the realization account, the firm has to sell the assets, and then next step, it has to settle the liability. Then it has to meet the expenses on realization. Then free reserves of profit should be transferred to partner's capital account. Then they have to close the realization account, and that realization profit or loss should be transferred to partner's capital account. Then they settle the partner's loan. Like profit, losses also should be closed and transferred to partner's capital account. Then they have to close, the partnership firm has to close the current account, and the current account balance should go to the capital account. Finally, they have to close the capital account. Okay, these are all the areas which requires journal entries at the time of dissolution. In the next session, we will see the problems in the dissolution.